Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this real live stream. Sorry, we're a few minutes late, but we are live. And today is Wednesday, October 16th, 2024. Andy, thanks for coming back on Liberty and Finance.
Yeah, always good to be here, buddy. Live streams are always interesting. There's no second chances. There's no second takes. So
It's
sorry we're late, but it's good to be here anyway.
kind of like when we were younger and live TV was a little bit that way, right? Now they've got that down pretty smoothly. It used to be, experiencing technical difficulties, etc. Actually, this was just the operator difficulty on my part. But anyway, we're grateful to have you
User
here,
error.
Andy. Yeah, that's right. And thank you for everyone who's out there in the live stream. If you're not in the live chat, you can get there by going to our Liberty and Finance channel on YouTube. You got to be subscribed. Just click the subscribe button quick and then jump in the live chat under this video and you can ask your questions for Andy right there. We're going to get those in front of him in just a minute. We first promised to answer some questions that a lot of our clients, Andy, have been asking who are very concerned about their retirements. And we've got a lot of our viewers, in fact, the bulk of our viewers, the demographic is shifted to the later career stage and retirement age community. And a lot of the assumptions that those good, hardworking, prudent, responsible people have been making about where their retirement is going to come from and what it's going to be based on, what the pillars of their retirement are going to be, are seriously in question now. And they're starting to ask lots of good questions, as they should. And they're getting answers that bring them a lot of concern. So I wanted to kind of go somewhat rapid fire with your help through a list of assumptions that people might be making that are no longer going to be true going forward, that may have applied in the past 40 years, maybe for the past two generations of retirees might have enjoyed the benefits of an environment that's not going to be present anymore. I even saw, I just interviewed Rick Rule. We posted that yesterday on a similar topic, and he said the game has changed, and if you're still playing by the old rules, you're going to get clobbered in the new arena because the game has changed. The tide has stopped coming in, the tide is going out. You've got to completely adapt your strategy, which is not always easy when you've been putting that strategy in place after decades and decades, and that's your plan. And so what are you going to do if that was your plan? So we're going to talk about that because the whole reason about our original channel, the reason we started it was to help people be aware and prepared and to prepare to survive and thrive. So that's what we're about here. Any high level comments from you on that, the topic, the
No, just
retirement, the
I
retirement
have a
strategy?
hard time with shotgunning. You know that. I've never been accused of being quick in my response, but no, I'd love to do it. I do think times have changed. I mean, Rick has a great saying: "If you're not a contrarian, you'll be a victim." These are unconventional times, and there's no question. I mean, I was listening to Jim Willie talk today on Arcadia Economics, and he says, this is the scariest election of my lifetime. And I mean, just simply saying something like that in and of itself tells you that times are weird and times are different and unconventional and time to think unconventionally. So yeah, let's give it a shot.
Well, I'm going to give a sneak peek here to the seven hidden risks to your retirement. This is just a outline that's helpful because sometimes when you're talking through something that's got a lot of legs and arms to it, it's helpful to have kind of some bullets to follow, at least to give some structure. It doesn't limit us in any way. We can go there. And folks, if something that we mention along the way raises a question for you, then put the question or comment in the live chat stream, and we'll try to incorporate that. This is a two-way conversation, and we want you to be a part of it. So good for you. Good on all of you for being here. And I'm going to quickly just try to share just briefly the outline because the old rule of tell them what you're going to tell them, then tell them, and then tell them what you told them is, it's very helpful to see what's coming. So here we go. Let's do a share screen, share, and I'm going to try to share this
Nice.
window. So here's a glimpse of a outline. The seven hidden risks to your retirement. One, the everything bubble is starting to pop. That includes stocks, bonds, and real estate, which used to be the three pillars of people's retirement plans as far as assets go. Next one is runaway debts and deficits, and that's closely tied to the next one, which is inflation and taxes. So the runaway debts and deficits automatically are tied, and we'll talk about why they're joined at the hip with inflation, why that's about destroying people's earnings, savings, and retirements. Taxes theft by design, we can touch on that as well because it's really becoming a problem, especially when they tax your Social Security and your Medicare and everything. And then next, nothing in the bank or brokerage is yours, The Great Taking. If you haven't read The Great Taking, it's a quick read. If you haven't heard the term that nothing in the banks or brokerage is yours, you'll understand how to explain that to your friends, neighbors, and co-workers and family members by the end of this chat. Social Security insolvency is looming. Not ever a happy thing for those who've been counting on that. Banks failing and more at risk. We'll dig under the hood of that one. What does that mean? I thought money in the bank was safe. We've talked about that before. We're going to talk about it again today. So, Andy, one of your favorite topics, BRICS plus and international dumping of the US dollar and US treasuries for gold. That, if anything, seems to be accelerating rapidly in the last quarter and especially this last month. So that's a quick peek. The first one there, the everything bubble is starting to pop, stocks, bonds, and real estate. So I'm going to stop sharing that for a moment so we can go to you. And I know you've talked to us, for example, about the volatility of the US benchmark 10-year Treasury bond, which was usually considered the ultimate in people's the mainstay of people's basically bond holdings or even institutional bond holding. But go ahead, and any comments on you on the everything bubble starting to pop?
It exemplifies the fact that the Fed is trapped, right? So they lower interest rates, and what do we see? Just about every day since they lowered interest rates, the back end of the market or the back end of the bond market has been going up. In other words, bonds have been falling and interest rates on the 10-year Treasury have been going higher. That's the market's way of understanding that we've succumbed to inflation the way that all governments have prior, giving in to inflation over austerity. And their way of saying, no, 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 you're going to have to pay us higher rates in order to take any type of duration debt instrument that you want to offer. And as we continue to create inflation, as we continue to pay for the reckless, irresponsible fiscal policy that doesn't seem to be abating in any way, even when looking at the policies of either candidate, Biden, excuse me, Harris or Trump. Inflation is here to stay. We have a Fed that has pivoted 60% away from their target rate of 2%. They've given into lowering rates again, acquiescing to the market, acquiescing to making things look better into the election, but 60% away from their target. In other words, this isn't a victory over inflation, it's a white flag, and they've given in. But even if the budget were balanced today, who pays for things like Medicare, Medicaid, Social Security, which we'll talk about, which depending upon who you talk to, is as much as $75 trillion underfunded. You ask Simon Black, that's what he'll tell you. And you know, who pays for that? Who pays for the Social Security and the government military pensions and this ever increasing mountain of debt through fiscal irresponsibility? So inflation is here to stay, and it's only going to get worse. And when you do this, you signal to the world, who's already having a hard time holding our treasuries and holding our dollars because they're being inflated away, because they're unstable. For the first time in 45 years, the 10-year treasury has greater volatility than gold. That's why these central banks are selling treasuries and buying gold, letting them roll off their balance sheet. It doesn't have counterparty risk. It's outperformed the treasury. And I think this is a trend that will continue, which means that the back end of the bond market, the rates like the 10-year Treasury, the benchmark of everything, like the mortgage rates, they'll go higher and higher and higher. So what they're doing on the front end betrays the reality, and I think the rest of the world has caught on to it. So yeah, this is why you would see trouble in the bond market, trouble in the real estate market, trouble in the equity market as rates ultimately move higher on the 10-year Treasury. It starts to create real problems in the real economy, much more so than I think what they're trying to achieve by keeping the front end of the rates low, and that just incentivizes more debt and more problems and more money creation and more inflation, and it's just a vicious cycle that at this point I think they're trapped, and probably not a good outcome when the music stops.
Another aspect that occurs to me is that so many of people our age and older who have made their plans based on the promised benefits of defined benefit plans and that sort of thing, pension plans, that those plan managers have made their models that assume they can meet those obligations to those retirees based on assumptions that the market's going to, on average, kick out 7% real gains year over year. And those models are screaming, the red lights on the dashboard of those models are flashing right now. And Michael Pinto, money manager that we interview regularly, talks about that they're just getting clobbered. These money managers who continue to assume into the future, indefinitely, that they're going to be able to get their 7% year over year or better return on stock markets and stock and bond portfolios, whether that's in and also in people's IRAs. That hits them at the individual level. 401ks hits them there, but in all these private and government pension plans that we're assuming that this gravy train of an ever increasing stock market and ever increasing bond valuations was going to prop up these promises that they've made to these retirees. That's all seriously in jeopardy right now. And we've had people in our own retirement community that said that they're having to move to smaller homes or cheaper tax areas because of that their planner told them last year or 2 years ago, yeah, you're set, you're good, everything's good, we're right on track. And he goes, yeah, you guys have to make some changes. You have to tighten your belt.
Yeah, well, and that's the problem. And when you get to the end of a macro trend, I mean, this has been a good run for the United States. When you get to the end of a trend where things start to I mean, it's like the period of quickening. Things are accelerating, as you mentioned earlier, and they are. And I think we're getting to a point where we've exhausted the good graces of our foreign creditors, and that's for sure. And so you get to a point where no one trusts us anymore. As Putin put it in a meeting in St. Petersburg a few weeks ago, Bretton Woods is dead. This is a system based solely on trust. Let's forget about the full faith and credit. I mean, because the faith has been obliterated in terms of the hallmarks or the cornerstones of this country: elections, immigration, judicial system, lawlessness in the cities. I go over it on and on and on, but that's part of the plan. Too stupid to be stupid. And the credit, we're 123% debt to GDP. When I was a younger man starting in this industry, if you were over 100% debt to GDP, you're a banana republic. Period. Well, at least we have election integrity and judicial system integrity. Oh, wait, maybe not. So, I mean, you go back 15, 20 years ago, before they changed the definition of a recession, you would talk about a country like ours, 123% debt to GDP, where people around the world question the integrity of the judicial system and the elections. Well, that's a banana republic. No, it's the United States of America and the world reserve currency. So, yeah, I mean, we're getting to that point where things are going to start to get real. The rest of the world understands this. And that's the difference, is that the rest of the world, in my entire career, Dunagun, they wanted to own our treasuries. It was an honor to take part in the American dream and to own our treasuries and experience the growth and the prosperity and the Western rule of law, which has been spit on. And I hate to say that, because that to me is more troubling than anything else. And I think that's the issue, is that the trust has been squandered, as has our image, and that's equally as troubling. So when you talk about, really, to me, forget about the front end of the curve that the Fed can control. It's the back end. No one wants to own our treasuries of any duration, and that is why you see a lady like Judy Shelton, who would be Trump's nominee for the head of the Federal Reserve, talk about, if you want to, and she's, by the way, a gold standard advocate, but she says, if you want to inspire confidence in any duration treasuries that the Fed issues, you have to peg them to gold and have them redeemable in gold. It's the first person who is speaking any type of sanity in a world that just seems bizarro, if you ask me, and getting crazier by the day.
The other thing, and our next thing in our outline that we wanted to hit on is about debts and deficits, and how that deficit and debts are leading to runaway inflation because of the corruption of the money supply. You've talked to us in the past about the hockey stick spike in the rate of debt creation. Do you want to elaborate on that, and on what that has to do with purchasing power of the dollar, and why anybody that thought that they having a large cash balance in anything, whether that was in a brokerage account or a bank account or under cash under the mattress, why cash is trash, as Robert Kiyosaki likes to say.
But it is. I did an interview last week with a banker, an ex-banker and politician from the United Kingdom. He said, in the United States for the last decade, inflation's run at 7%, or money creation. Money creation. Money creation is inflation, not rising prices. You inflate the money supply. You inject money or you inflate the money supply. So money creation or a monetary event is what inflation is. It's not rising prices, which are a symptom, of course, of money creation. And as I mentioned to you before, I think I mentioned last week, I may not have, but the rule of 70 seconds, the law of 70 seconds, you take the interest rate, in this case of 7% in terms of increase in money supply each year on average, which I think is low, and you take that number of 7% and you divide it into 72, you get 10.2. Whatever number you divide into 72 tells you how long before your principal doubles. And this is probably why they put credit cards at 18% times 4 is 72. So if you just pay the minimum interest, your principal doubles in 4 years. But when we talk about a 7% increase in the money supply each year, you're talking about 10 years ago, the money supply or the currency value was worth double what it is today. So in other words, the currency has been cut in half. The value has been cut in half in 10 years through money creation. And look at gold. Gold was what? $1,200 10 years ago, and now it's 26 and change. Did gold go up by over double, or did the currency fall by half? And that's really the point here, I think, really that is important to understand is that the rest of the world understands that this inflation that we are creating is destabilizing the value of the dollar that they would sell their goods and services for. And so it's becoming a real big issue, and it's an issue that will continue as we have brain dead monetary policy, but more so massively irresponsible fiscal policy, where we are creating $100,000 in debt per second, 24/7, or a trillion per 90 days, roughly, which took 200 years to do the first time. This is not lost on the rest of the world. This is why we're getting to that hockey stick moment, because at some point the rest of the world says, are you kidding me? Why would I buy that treasury? They're literally printing their way into worthlessness with absolutely no restraint whatsoever. Why would we want to do that? So as less and less and less entities want to hold our treasuries of any duration, who's going to buy it? No one other than the Federal Reserve. This is Weimar Republic, Germany. It's monetizing the debt. It's creating money to buy the back end of the market. This leads to a very dangerous, reckless place. This is why Bill Holter and I say the exact same thing, just in a different way. He says too stupid to not be planned. I say too stupid to be stupid. It's as if these people have either no understanding of economics whatsoever, all up and down the whole, chambers of government, or they're doing this to destabilize and destroy the value of the dollar, to make everyone else find no incentive to hold anything related to dollars or the treasury market, because its value is being inflated away day by day, actually second by second, minute by minute. That's a trend that's not changing. And you know what? You don't see either candidate really addressing this. Yeah, Trump is talking about the BRICS. So is Marjorie Taylor Greene, but they're not addressing the root problem. And the root problem is sanctions, it's weaponization, and it's continuous, irresponsible fiscal policy that's going to come up and catch up with us all and create this religious experience where, bang, things change just like that. Now, that may not be next week with the BRICS meeting, but it's coming.
What you just said about the candidates that we're faced with are not talking about it. I find myself having to just breathe, just keep breathing to make it through when you see debates happening and they're talking about arguing about who's going to lower your grocery prices, or who's going to give you subsidies so you can buy your first house, or who's going to lower, forgive your student debt loan. But it's completely ignoring all the root causes of the destruction of the currency. And it really does give the impression of the stage show that's being put on in front to keep people distracted, while the real carnage is happening and has been happening for a century, and carving out the heart of good, hardworking, middle class earners and savers all across our country, and impoverishing our people at the to the benefit of the some very high upper crust, but not for the good of our country, not for the good of our children and
And
grandchildren.
again, you and I grew up roughly in the same time. We're pretty close to the same age, and you're a little older and look a lot better. So, kudos to you. But we grew up in a time when we had the birthright of living better than our parents and our grandparents. And, this may be the first generation where all of a sudden our kids without some help, they're probably not living better than we did. It's like things have stopped. That American dream has become much more difficult. Home ownership and 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 the future of a country where people, where like my son, who's now working for my company, but for 2 years worked for Price Waterhouse right out of college in Manhattan, paying $78,000 a year in Manhattan. He would have starved to death if I didn't help him. Literally living with three people in a hovel, and you know, who needs a $78,000 junior accountant to analyze a real estate investment trust balance sheet with AI anymore? Things are changing in a very big way. The middle class is being eviscerated. And either you have a lot of money because you have a job that it provides security, or you own your own business, which the small businessman has been getting hammered, which is traditionally the cornerstone of this economy, or you got nothing and you're struggling. And it's getting tougher and tougher and tougher and more expensive with insurance and gas and food. And yet everyone's trying to live the American dream. It's clinging to the last vestiges of this macro trend, or this cycle that seems to be coming to an end. And I hate to be the bearer of bad news, but something's got to change. It has to change. This irresponsibility that we have shown the world, this recklessness, and this whitewashing of our culture, that people around the world are, I think, shocked as to what has happened to the beacon of liberty and freedom and justice. It's gonna create something that's gonna wake up some people. And you know, you don't have to be a genius to understand that it's happening. It's accelerating. Um, you know, not to go off script, but you look at this BFTP program, right? This program,
The Bank Term Funding Program, yeah.
right, and it's due to end. All of the liquidity pulled out of the market the day after the election. Now, the conspiratorialist in me would say, well, they're setting up Trump for a rug pull. Because if you look at every other time that the Fed has pulled liquidity out of the market, bang, the whole thing collapses.
Locks up. Yep.
The day after the election, it's due to come to zero. And if it weren't for this program a year ago, what would have happened? We'd have seen a massive bank failure, a cascade of bank failures, a run on the banks. And this is something that I think is going to happen anyway. I think they're going to set up one of the big banks to be bailed in. And that is the moment right there when the public says, my goodness gracious, what is a bank bail-in? Now what? They all lost everything, our neighbors. It's gone. And that's when you see everyone run to the banks. That's when you see a bank run. That's when you things start to get real quick. And I don't know, there's a fine line between conspiracy and reality, but I don't know. It just seems that people are too complacent right now. And I'm a little freaked out with the BRICS meeting coming up next week, which I don't expect to be earth shattering, just some clarity, but more importantly, the election. And I think the real freakiness comes after the election, whatever that outcome may be.
I want to augment one of the things you said, because I think it's even worse than you stated it. You said we are now at the turning point where the next generation can no longer look forward to a higher standard of living than our generation. But I think that has been masked, as it often is when we have so much recency bias and normalcy bias that we just keep on keeping on, as if, for example, back in the 1950s and 60s, where we both lived in Minnesota, the average blue-collar family could afford a lake home. They could have their house in the Twin Cities, for example, and they could afford a weekend place to go up to on a nice lake in central Minnesota or up in the Brainerd area or whatever, and go up there and own that, just a cabin on the lake. And they could do that on one income. You could have one parent staying home raising the children. Imagine that, and one bringing in an income. Now, for the last generation, you've had two incomes necessary in order to be able to pull that off. And then meanwhile, they're paying child care and et cetera, et cetera. And this has already been an overhang. And oh, by the way, back then there was actually people having savings. Now people are carved out to where they're living on credit cards and so on. So that was not the thing back in the 50s and 60s. And so, Rick Rule talked to us about the destruction of earning power through the 70s, just people getting clobbered like to tune of less than a half by the end of the 70s of what they were at the beginning if they were on fixed income. So I think we're living already in that first generation where we're play acting as if we're still living the American dream, but actually now it's taking nobody can stay home and take care of the kids. You got to have both parents bringing in the income. And oh, by the way, then you got to be running debts in order to make it still look and feel like you're. So it's kind of like zombie companies. 40% of the companies in the S&P 500 are and the Russell 2000 actually don't even have enough profits to cover their servicing of their own corporate debts. So it's the overhang. It's already what Rick. I got to tell you, deceased good friend of ours, Rob Kirby, said it's when the coyote runs off the edge of the cliff and he's still hanging there in midair. He hasn't realized yet that he's not standing on the ground, and he hasn't held up his little umbrella that says "Yikes" yet. But that's the where he saw us, and this was 4 years ago when I interviewed him on that.
But think about
So,
what you just said too. All of these zombie companies that don't have enough money to pay their corporate debt. Kamala wants to double the corporate tax, right? And I mean, it's like you got John Paulson saying, if she wins, I'll yank 9 billion out of the market because of the doubling of the corporate rate, because of the doubling of the capital gains rate and the unrealized gains. Now, she may not be able to get that through, but what I'm just basically saying is that it's like the quickening. It's like things are spinning so much faster on every single level. And for people to be complacent in any respect right now, to not be preparing on every level, and it's not just gold and silver. You should have cash. You should pretend there's a hurricane coming. And I talked about this a lot. Coming from Minnesota, I was blown away. Living in Delray Beach, we got nothing but 50-mile-an-hour winds, no rain, nothing on the last hurricane, right? On Milton. And we knew that 3 days in advance. I couldn't get a quarter mile away from Costco 3 days prior to the hurricane. And when I went to the Publix grocery store, and they're on every corner, there was no milk, no water, no bread, no nothing. It absolutely blew my mind. Coming from Minnesota, where you have blizzards and all kinds of stuff, it was never like that. Never, never, never. And here we were, not even near the edge of we were nowhere near what they said. The storm's not going to hit us, but maybe some heavy winds, so you're fine. And yet everything in every grocery store and Costco was gone. And so it reminds me of, reluctantly preparing, and we're getting to that point. And yet for the first time in my life, I am actually very concerned as to what the world looks like literally between now and the end of the year, because it doesn't matter who wins. Whoever wins, that's when the craziness begins. And I don't know, people need to wake up to the fact that traditional assets are very risky right now. Never been thought that way, but I would argue when you look at the valuations of all of these indices and at all-time highs, you're messing with fire, because the insiders are selling at a level no one's ever seen before. They know what's coming. Sit on the sidelines. Even in cash, you're better off than sitting in equities at this point, in my opinion.
So you already led us into, so we'll skip right through nothing in the banks is yours, although we didn't talk about the Dodd-Frank Act. You did talk about bail-ins, and that's, I think, the key point there. And just to remind everyone that the law was changed. The game has changed. As of 2010, with the Dodd-Frank Act, any deposits that you have made into the bank, checking, savings, certificates of deposit, or the contents of safe deposit boxes, any deposit you have made into the bank is no longer yours. You have given it to the bank as a loan. You trust them to do whatever they're going to do with it, and they're going to do whatever they need to do with it to make a profit. And that may be a very high risk thing. You have no idea.
You're an unsecured general creditor, last to be paid. But can I say one thing, by the way? I don't mean to
Go right
interrupt
ahead.
you, because I don't even know if it's the most important thing anymore. Because as part of the Dodd-Frank Act, we've talked about this, and you had experienced it personally, you and your wife, money market gating. And if you look at the amount of money that has left the banks into money markets, it's like an all-time record, $7 or $8 trillion in money markets. And they passed money market gating legislation in the same Dodd-Frank Act because Bear Stearns, or excuse me, Lehman Brothers, was controlling a good portion of the money markets, and they failed, and everyone tried to yank their money out, which is called breaking the buck. And you got gated. And I don't know if you ever were made whole, and it took a long time. Maybe you can explain.
No, we were never made whole.
Okay, so you were never made whole, and you were gated, you couldn't get out. So now you have record participation in the money markets, which obviously bail-in legislation will freak everybody out. But everyone with their big money, every time I have money in one of my bank accounts at Truist, they'll call me, you got money and you should put it in our money market account. You get a better rate of return. Thanks for calling. I appreciate it. Well, everyone's gone to the money market, and they can be gated if trouble starts. Just like that, you're locked. And you ride the wave down. And here Dunagun is, This happened to him. What? How many years ago did this happen to you, Dunagan?
That was in 2008, so that was
Okay,
16
so
years
here
ago
we
now.
are. Right, 2008, he's never been made whole, and he was gated, and he couldn't get out. So when you talk about bail-ins, yeah, it's huge. But the even more diabolical thing now is money market gating because of the amount of money that is chased yield leaving the banks. It's record. And these people who think they have overnight liquidity, oh my goodness gracious, what a surprise they're in for. God forbid. But that's the kind of moment where things get real.
You just echoed something, and Rick Rule spelled it out as he typically does. He dove down another layer underneath the hood. He said, because the prospectus that you bought on for this high yield account or fund was showed you that they're going to get this high yield. The way that they get that high yield, which at the moment is very liquid on the surface, one day access to your funds, but the way that they get that yield is underneath. They're carrying some real ugly paper for some companies that couldn't get funding other ways, and debts that other people didn't want to touch. And so they're getting a really high rate on those because they're high risk. And he said when people start to try to redeem those, in as you just said, what happens is the clients on the surface, that's us, call up our brokers and say, sell my shares in that high yield fund. And then as soon as everybody starts doing that, it's the fund managers that then have to try to sell to keep up with that liquidity at the retail level. They have to go down and try to sell those dirty paper at the institutional level. And as he said, like an owl, too-hoo, too-hoo,
Yeah,
no
well,
bid. Nobody's gonna want to buy that.
Rick is a genius, and he's starting a bank, and he would know. But let me just add a little frosting on top of that icky cake. This is I titled it. I wrote some notes. I said something wicked this way comes. Lloyd's of London is the world's leading marketplace for insurance and reinsurance, and currently are pricing in incredible skyrocketing risk premiums. Lloyd's reported that geopolitical conflict scenario sees global economy exposed to $14.5 trillion loss. So here you have the largest insurance company who insures basically everything in the financial universe saying that they're concerned about a $14.5 trillion loss because of geopolitical concerns. But I mean, really, that filters its way down all the way through the system. Uh, these things are real. The crumbs are right at our feet. And if you don't see it, you're not paying close enough attention. And you know something that really sucks always having to be the buzzkill at the party and the bearer of bad news. But this is what would you rather know? Would you rather know it's coming or not? And I think that there's a fine line now between realism and pessimism, and it's getting real. It's getting very real. And I don't know. I think as we get closer to this election, which is incredibly important, mind you, um, things are going to begin to accelerate to a degree that I think will shock most of us because it's been relatively uneventful, save the two assassination attempts on President Trump. Nowadays that's just, oh, that's no big deal. But I think the real shock comes in the banking system and the culling of the banking system. One bank, all it takes is one bank. Is there any coincidence that Warren Buffett sold 9 billion in assets out of Bank
BOA.
of America? Right. I mean, one bank gets bailed in, or one money market gets gated, or I mean, all it takes is one, and the fuse is lit that starts this cascade of craziness. And I don't think most people in this country are prepared for what's coming because they have no idea that it's even an issue.
Right. So in the study, when we had the second, third, and fourth largest bank failures ever in the US last year, and Janet Yellen broke the law and stepped in and said, well, we're not going to bail them in, we're going to bail them out because uh, even though the Dodd-Frank Act requires us not to do that, we're going to do it because we've decided on a case-by-case basis, after careful consideration, that there was systemic risk. What she didn't say that she didn't say the quiet part out loud, which was if we hadn't have done this, it would have brought down the whole system, which is exactly what systemic risk is, exactly what you're talking about. There was a vital risk to the survival of the entire banking system, and so they felt like they had to, because that's when she was grilled by the representative from Oklahoma
Oklahoma.
and said, "Are you going to do that for my constituents in our local community bank?" She said, "Well, only if they're systemically risky." So it just worked out kind of nicely for the Silicon Valley billionaires, depositors in those banks. And you've railed about that before, but I think what people don't understand is then the Claro study said that at that same time there's 282 more banks at least some studies stay more closer to 1,000 that are at similar or worse risk than those that went under in 2023. So, and then we also have shared with our viewers the leaked video from a behind doors FDIC meeting where they said there could be unintended consequences if we were to tell the public that we know there will be bank runs and we should inform those who need to know about it ahead of time, but not the general public because of unintended consequences. So
Yeah. One of these days, all of this stuff won't be fear mongering. It will be, we tried to put together the crumbs that are laid at our feet. And I think it's getting there. I mean, I really do. And in many ways, I find it cathartic talking to you because so many people that I care about can't hear this kind of discussion and they won't acknowledge it. They won't listen to it. And that's the scary part. I have people that I love and care about who tell me watching Morning Joe is the best part of their day. And I mean, I don't even know where to go with that because so many people are being just and it's so crazy to me that the media has lost all integrity. I hope that I guess the bottom line is that a lot of these people, in my mind, should be put in jail. And I don't know what's going to happen if Trump wins, if he will do these kinds of things, expose. You got Nancy Pelosi who admitted, and all of a sudden not admitted that she threw Biden under the bus, that she was his friend, and she feels bad about it, but she didn't think he could beat Trump, and so she in essence threw him out, and because he couldn't win. Um, they're just bad people, and this is not lost on the rest of the world. A country where everything that we hold true is supposedly based upon confidence that's been shattered. This is what needs to change first and foremost. We need to get our house in order here. That's why I want him to win. Because if not, I'm afraid that, with all the people that have entered this country illegally, 25, 30 million people that will be given voter rights will never see a Republican administration ever again. If not, I hate to be this way because I'm not this way. But I mean, at some point you have to acknowledge it as being reality. So please forgive me if I'm crossing the line. I'm not trying to. Again, I'm the son of a couple of hippies, so I get liberal, I get lifestyle, but at some point we have to realize that what's being done is far past having a liberal lifestyle. It's changing the ideals and the culture of this country and in a bad way.
now, not everyone in the world is taking this lying down. You've alerted us for the past couple of years now that perhaps even leading to be the majority of the population of the world and almost the majority by GDP soon, and possibly also by military might, if you add it all up, have decided to turn away, not to be passive victims of this freight train that's coming down the tracks, but to get off these and get onto a more productive track of sanity rather than insanity. Can you talk to us about the latest, perhaps even accelerations and developments even this month in the BRICS Plus pivot away from the dollar and U.S. Treasuries and into gold? What do we know specifically about actual actions that are being taken there?
Well, I mean, we know that one of the things that I find very interesting is that Turkey has formally applied to the BRICS, and here they're a NATO member. What does that signify? We have the meeting in Kazan here next week. One of the mistakes I think that James Rickard made last year was saying things that I think will ultimately come true, things that I've been saying for 3 years. The Shanghai Cooperation Organization will indeed join the BRICS. Will it happen now? He said it would happen last year, and he got kind of beaten up for it. He'll be right. His timing was wrong. That's the history of my company. That's the history of everything we've ever said. Timing is impossible. That's what the one thing about my talking about BRICS for 4 years that astonishes me is that I was right on the timing, because I've been wrong on a lot of things. But seeing the timing in my mind's eye and watching it come true and accentuating, accelerating, when I was one of the only people in the country talking about it, is amazing. Well, James will be right. We will see the Shanghai Cooperation Organization join the BRICS. We will see the Eurasian Economic Union join the BRICS. The president of Belarus called a summit for that indeed to happen. He said it would happen last year. It didn't. It will. He said that there would be a common currency last year announced at at the meeting in South Africa. It wasn't, but it will, and it may not now. They may say we've, as Dilma Rousseff, the president of Brazil, former president of Brazil and the head of the New Development Bank said, we've agreed in principle to the unit settlement currency, which will be traded over Enbridge, pegged to gold, 40%. We've talked a lot about that. We will get greater clarity on that. Will they issue it this week? Probably not, but greater clarity indeed, yes. 59 countries have formally thrown their hat into the ring. Will we find out which ones? Probably. Will we find out more have been admitted? Maybe. But this is one of these deals where the cat is out of the bag and things are moving in a progression that is undeniable. Yes, greater percentage of GDP, 3 of the 4 largest nuclear arsenals, larger portion of human population. You throw the Belt Road Initiative into it, you got 80% of the world's population, the majority of all the commodity production, the trade routes, both on land and on sea. The 100% refining of all of the world's rare earths, 85% of their production. I mean, this green thing we haven't thought out real well, it's becoming real. And it's as if we have assisted in this move away from the dollar through our actions of weaponization, of signing in order to go green, of destabilizing the interior of the country. All of these things we talk about, this is what is incentivizing the world to move away from the dollar. And now you get countries like Russia saying, we're going to add silver to our strategic stockpile. This is the first time we've ever seen a country say that. They also said platinum and palladium. Well, who makes them or mines the majority of the platinum and palladium? South Africa and Russia, BRICS countries. Now they're going to start going after silver. China is flying all around the world buying doré and concentrate from the miners, paying double what the West will. They're the second largest producer in the world. Do you see what these BRICS countries are doing? Whether it be on the Belt Road, whether it be in the BRICS, whether it be in their own national interests, they're accumulating commodities and selling dollars. That is where we're going. This is what the world will be all about, transparency in commodities. At the same time, we're concerned with debt instruments and not being transparent, and sanctions and inflation and craziness in our cities, and lawlessness and divisiveness. We've diverged so far from what made this country so special that's what we need to get back. More than anything, we got to start one piece at a time, starting with our own house. But what you see happening with the BRICS is real, and it's becoming more real. And now you got Marjorie Taylor Greene. I grant you, she doesn't have the most credibility. She's screaming the BRICS are going to take over. You got Trump saying we're going to lose our reserve status. And what does he say? I'm going to keep that, and we're going to sanction, and we're going to put on 100% tariffs. And he's also talking about a weaker dollar and low interest rates. It's not what you need to do. Yes, he's better than the alternative, and he'll get our house in order. But in terms of stopping the move away from this growing chorus of countries, they're finding unity because of sanctions, because of tariffs, because of weaponization, because of hypocrisy, because of destabilization of the dollar and the treasury. You don't have to be a genius to put this stuff together. And the problem that most people have done, again, quite frankly, is that instant gratification isn't fast enough. Why isn't it going up faster? Silver's up 32% this year, but that's not fast enough, damn it. It's underperforming. And gold is rocketing, but it should be higher. Okay, fine, you're right. It should be. But why are 8 commercial banks holding the largest short position in any commodity ever traded in the history of the COMEX? And why do we see between a 5 and a 6 billion ounce short position on the London Metals Exchange that is being exploited by these countries? So this is a trend in motion. These countries know that they can beat us by exploiting our stupidity, and they're doing it. And they're draining the world's exchanges of all forms of commodities, not just precious metals, base metals, soft commodities, everything. And this is where the game ends. And the problem is that we're not getting anyone but me screaming redundantly about the same thing over and over and over again, and a few other people like you and some of your guests saying it. So many people will be caught off guard by the significance of this. And I just think people need to understand that all good things come to an end. I don't want to say that. I got 3 kids, my youngest being 17. I want her to grow up in a great world. But if you don't prepare, as Rick says, if you're not a contrarian, you're damn well bound to be a victim. And that's for sure. And I think we'll get a lot clearer picture of what the future looks like as soon as the next few weeks. But we won't know the full picture but little pieces, more crumbs to follow on this linear progression of events that you and I started down 3 years ago.
I wanted to give you a chance to quick show folks what the specials are this week before we ask a couple of viewers questions, and then I see we're coming up to the end of the
You
hour.
really
Let me
think I
just,
could tell you what those are? I have no
I
idea.
got him, I got him, I got him. Hold on, hang on. Yeah, let me just share.
I
I'll
own the
try to show.
company and I've been pushed away from so much stuff. I have no darn idea what's
Well,
going on.
you're a strategic guy now, so here we
I
go.
guess
Here
so.
I'm going to share. Here we go. Hold on. Okay, there it is.
I love
First one.
those. That's just ridiculous in terms of price. And they're amazing. And that's Americana. In 2008, I would have flown to wherever you were in America and I would have paid you a 40% premium to spot. With $1,000 spot, I would have paid you a 40% premium to buy those and to swap you into gold bullion, which is what I did all around the country. This is a gift. Those are as cheap as I've sold them for my whole career. If you're looking to buy gold, those are as good as it gets. And I love the $10 Liberty. One of my favorite coins ever, ever, ever.
Yeah, just to remind everybody, these are from the U.S. Mint. They were minted from 1850 to 1907. They're just under a half ounce of gold. They're priced just so you can figure it out super easy. Take the current spot price of gold, take it by half, and add 24.99 to it. That's what we're selling per coin. So that is lowest I've seen them too, Andy. And you've been at it a lot longer than I have.
They're
Here's
just
the
amazing coins,
oh,
man. They're just amazing. They were in someone's pocket 100 years ago.
and then uh, Australian kangaroos.
The purest silver coin in the world. That and the Canadian maple leaf. Boxes of 250. You know, your 10-year-old daughter could carry them. They're the only mint that makes mini mint boxes right from the mint. Um, as high quality of a coin as you'll ever find. One of the major mints in the world. Awesome coins. I own a ton of them. So again, we're beginning to see things start to disappear. This is a good deal before things do get very tough. We're out of 1 ounce gold maple leafs, both backdate in 2024, the 10th ounce gold eagles. Things are starting to disappear. This is a good price at a low premium. I don't suspect that we will see these premiums a month from now.
Mhm. All right, I'm going to try to
Let's
grab
take
these.
some viewer questions.
Yes, yes, yes. So now, and Rick brought this up too, in addition to people who are looking to compensate for the destruction of the value of their cash, cash being trash, et cetera, and their banks being at risk and Social Security benefits going down in purchasing power, et cetera. He's saying that those who position themselves ahead of time, not only in physical precious metals, but especially in some of the best mining companies, are likely to get over rewarded because when the public wakes up and tries to crowd into that little phone booth, there's not going to be enough room, and that means the price has to go up for that. There was a comment here from one of the viewers who said that even one of the Florida U.S. Representative Debbie Wasserman Schultz, chair of the Strategic Metals Committee, recently bought a bunch of one of her favorites, Hecla Mining, and that's the idea. I mean, that Rick was talking about is positioning yourself in some of the best managed mining companies. I know it's not your central focus as a CEO of a bullion company, but you certainly hang around a lot of these around the Rules Investment Symposium, around the Vancouver Investment Symposium, et cetera, to have rubbed shoulders with a lot of these people. Any thoughts from you on people who might want to take a small position in mining companies as a way of compensating for the destruction of their cash and everything else that's going on in the next decade here?
Yeah, you know, the people who buy physical gold are different sometimes than the people who buy mining shares in general. I've worked with Rick for 25 years. He sent me his clients, and whether it was Global Resource or Sprott, I love Rick. He's done a lot for me, and I have nothing but the highest of respect for him. And I will tell you that many of his clients, I think, well, most of Rick's clients probably own physical gold. I guess that's important to say because you listen to Rick, he talks about both, but when you look at a valuation of the mining shares, they're as undervalued as anything you could ever see because the broad market has completely and totally ignored precious metals, 100%. And a lot of the people who own physical metal don't own mining shares. A lot do, but a lot don't. A lot don't want anything to do with anything that is a mining share. But I will simply say this, that I think that there's a place in everyone's portfolio for mining shares. The most money I ever made in my life was owning a mining share, ever. And on a few occasions, I have been really, really rewarded by owning mining shares. And if you ask a guy like Rick, he's one of the smartest human beings I've ever been around. And I say that sincerely. Um, he will tell you the money he made is when he bought things that were underappreciated. And you look at the market crash in 1929, Homestake Mining was the number one performing stock. You look at the overvaluation of so many of these indices and so many of the tech industry, and a lot of it unjustified. You look at the mining industry where gold has led the way. Normally, the mining shares lead the way. Not this time. Gold and silver have outperformed the mining shares. And when you talk about value, or asymmetrical risk reward, where the downside risk is much lower than the upside potential, I look at silver and I look at mining shares. Now, one of the things that I have used my whole life, and I own mining shares, and largely because of my relationship with Rick, um, I use a pyramid model, the same pyramid model the Swiss have used for 300 years. The base of your pyramid would be things like paid for real estate, physical precious metals in your own possession, and cash. Now, mind you, cash is losing value, but you need it, and you need it in the base of your pyramid. The middle portion of your pyramid would be 6 month or less duration treasuries paying 3, 4, 5%, 4.5, 5. And utility stocks paying a dividend or something in the top 10% would be cryptocurrencies for those of you that fancy that, and mining shares. But the reality of it is that in that top 10%, it could outperform the bottom 90. But the Swiss do it that way so that if they lose everything on the top 10, break even on the middle 20 or 30, the base of their pyramid isn't eroded to speculation. It's not an upside down inverted pyramid. The potential for silver and gold mining shares is extraordinary, but it also has great volatility. Anyone who's owned it for a long time understands that. And counterintuitively, I will simply say this: I don't remember a time where gold and silver, if you would have told me gold and silver would be at these levels, or in particular gold, and the mining shares are where they are, I'd say you're crazy. So when you talk about a value proposition or asymmetrical risk reward,
Mhm.
I don't know that I've ever seen anything better. So yes, everyone should own some, and I think they'll be well rewarded for doing so. Just don't invert your pyramid and risk too much to speculation.
You're reminding me of Jay Martin, who's the host of the Vancouver Investments Conference, talking about a barbell scenario. As you said, sometimes it's different people who are aggressively interested in appreciation that go after mining shares versus people who are interested in safety and security and preservation of capital that go after gold. He says he does both. The ends of a barbell. What he leaves out is the skinny part in the middle, which is all the mid-range stocks and everything, the main stock market that everybody else has been piling into through all their 401ks and ETFs and everything for the past several decades. But he says he goes for as you said, the underpriced best mining companies on the one side and the underpriced real assets, gold and silver on the other side. So he's got those conservative and aggressive sides of the equation covered.
And I do want to say the only two conferences I go to are Rick Rule's conference, which is 5 miles from my house here in Boca, and it really sucks going to Jay's conference in January in Vancouver. I live in the bottom of the state of Florida, and to fly to Vancouver, you couldn't ask for a longer flight, but the conference is so good that I wouldn't miss it. And he does an amazing job with amazing speakers. If you're looking to go to a good conference, the Vancouver Resource Investment or the Rule Symposium, I don't think there are two better that you could ever go to.
Well, we're grateful. Darn it, it's the top of the hour, and that happens. But we're grateful for everyone's presence here. It's been very exciting on the live chat, very active discussion among people. People asking also about platinum. We didn't get to that question. They're saying, based on the ratio, is platinum, one of those, you use the analogy of snowfall in July in West Key West as a rarity as far as the inversion of the cost ratio of platinum versus gold, et cetera.
I
Uh,
bought platinum today for myself, honestly. Honest to God, I did, and I haven't bought any in a long time. I bought some Platinum Eagles that we took in, and we have a couple hundred in stock, and they're as rare as hen's teeth these days. And to his point, yes, the argument for Platinum is as strong as it is for silver in many respects. But Platinum has a high bid-ask spread, has high premiums if you buy the Eagles. I don't know. I bought some today. It's the first time I've done it in a long, long time. So to that person's question, I follow my own advice. Honest to God, I bought some today, and I think it's wise to own some, but to me, it's third in line after gold and silver.
Well, Andy, we're always grateful for your
No,
presence
Dunnigan,
here.
I need a friend. Don't go.
Well, you've got let's see, there's 1,691 views so far out here in the live chat. We still have 492 concurrent viewers out there at the moment. So they're all saying Andy's on fire, Andy for Treasury Secretary, a whole bunch of stuff. So you got a lot of friends. You're
You
not
know what?
lacking for friends.
Yeah, I don't know. I don't know how well I would do in the halls of politics. I may ruffle too many feathers,
Well,
but
that's a different question, isn't it? How do you survive in the belly of the beast? That's a different question entirely.
well, I don't know. You hope you go there with good morals and intentions, and you actually come out with the same. But hey, man, you know what? All it is common sense. That's all. Common sense, which is lacking these days. And you're full of common sense. I try to. It's just common sense. That's all. And
Well, and I believe that
you're
our
off
viewers
the-
are too. Our viewers are here because they are as well, and it's very difficult sometimes for people who do care so deeply about our family members, our coworkers, our neighbors, our countrymen, and how to help them to see that there's still time to take effective action, as you would if it were days and days and days before a hurricane or something. You're still going to get your preparations in place. It's better to be yes, it's better to be 7 years early than one day late, but it's also better to be 7 days early than one day late. So if you've been putting it off, if you've been thinking you shoulda, coulda, woulda, there's no time like the present. The best time, uh, better than planting a tree now would have been to plant it 10 years ago, but today is the day. So anyway, folks, let's not put off proper preparedness steps that we can be taking now. We have the power to act in the present. That's why we're here. We are made for times such as this. Andy, thanks for joining us on Liberty and
And
Finance.
again, you are the best, my friend. God bless you and everyone else, and look forward to checking it. Oh, yes, I will see you next week. That's something else. Look forward to seeing you next week. You and everyone else. You take care. God bless.
All right, we're going to end this stream, guys, right now. Thank you for being here.